Welcome to TradeTheNBI.com. This is John. This report is for the 31st of January. Well, Friday saw that important move, and we talked about this, the 43.53, 23% line. So while we were below it most of the day, what we did see, though, is the magenta rising and moving well above, white continued to decline, but also above the red at that point. And that was enough to spark it. And once it reached the 23%, that kicked in all the big buyers, and boom, it just continued to shoot up from there. We can see the midterm buyers, once we reached that negative 22 range on the DOC down there, it was negative 23.50 on the red. Typically a pushback point where we get rallied, or the question whether or not the rally sustains itself, that becomes a separate issue. And what we look for there will be obviously the red moving, the magenta moving below the 33 level here, but critically below the 25, where we see then also pivot of the white. That would suggest that we're going to retrace back through here. It does put in play the 50% up at the 45.10 range, and that's something to watch as we meet the shorts right here at cyan with the green, and particularly at this negative 7.5 level. If cyan dips below, tend to get a bit more of a rally from that from a daily standpoint. You can see even the NASDAQ breached its 23% level right there, and critical from that standpoint too, because it also moved the magenta above white at that critical stage. So all those things consistent, pointing in line. Of course, gold bugs are always going to be crying when this happens, as a little fade off when the market moves bullish, and that's just the expectation that in fact the Fed probably isn't going to do a whole lot against inflation, and or a belief that it's better investments elsewhere to capture bigger return. And that's, I think, Bitcoin favors that situation quite a bit. From a euro standpoint, of course, breaking down to those new lows, not unexpected. We would have been expect move towards 110 lower. We'll see if it's able to sustain that. The Eurozone's got definite problems. Of course, they're all excited about Italy re-electing its president, as if that has some magical power to do anything. Not really. We'll see how that plays out. This is still going to be the problem. Rising oil. And as long as that continues to maintain this high, this has huge implications down the road, months from now, and probably be another catalyst for the Fed. And then it comes the question in the debate over a quarter point hike or 50 basis point hike. And that would really be significant, because if the market begins to believe that the higher rate hike, 50 basis points, happens, then I think that we would see some major turbulence in the market. And of course, interest rates from this standpoint holding on fairly decent. We still expect the obviously we have the lows revisited on the rise of the white NBI, but a little bit of support there as more people move into it. Eased off the rates just fractionally, but I think they're still going to come under pressure as long as we see that significant rise in oil, because it puts inflationary costs throughout everything. The only thing that could hold it off would be further lockdowns and or some kind of major economic contraction. Bitcoin, decent move off of the low from just several days back, but then as we reached the bottoms, formed a nice little convenient setup there. We were still riding with white coming back, which suggested a move back to the 50%. It did do that, and at that point the magenta moved above, and that is what solidified it from this particular point right there. And even now we have magenta rising, so that's bullish there for Bitcoin from that standpoint. And ETH was kind of back and forth most of the day, and then late the day, just like on the ES, and that everything caught a buy, and then exploded towards the later part of the day. A lot of positive extremes within that, and of course when that happens, what do? They fill. So we had positive extremes going all the way to here, and then the lowest level was right there, which is what we just saw filled in the pre-market, which is not really pre-market because it's trading non-stop. So fairly straightforward from that standpoint. From a 50K standpoint, we see the buy was captured midday, and a little bit of a brief sell-off, and this was a tough one because when that happens where magenta and white meet, and then as soon as the rejection, you knew that that was going to continue to the positive side from there, and in fact that's exactly what it did, and that was your short cover rally in a nutshell. The 5K, and what we see is market on the positive side after having that huge blowout buy, and this is where it started right here. A little bit tougher on a read standpoint because we went into the super oversold, and it could still remain low in that aspect. Yellow dots, of course, stopped, and we had a break right there, and this was at a point where magenta had just faded below white there, but then it popped back up again. So it's one of those where back and forth, and would have been really kind of a tough one to, you just have to pick the direction. On this case, we had rising shakeout along with rising DOC red and that an orange dip. I tend to lean towards the plus side on that kind of configuration. Because even with the white leading right there, the best we were going to get once the magenta popped over was a move back to 50%, which is exactly what it did right over here. But once it reset and white ended up below that 10 level, and that it was just off to the races, and that's exactly how we finished off. And then most of the day prior to that was just a series of back and forth. We had some really nice runs, and they all seemed to fill back in place because of the positive extremes that were created off them. But it was enough to build the stable momentum that allowed the market to really cause some short covering. And literally when you get that kind of rise, and it's interesting because we've seen it for the last several days, this late afternoon buy setup typically happens all at the same time and really ramps up significantly because it's like a relentless buy configuration, and really designed to force that short covering. And that's kind of what we see within the daily charts on all of these, where we had these significant wicks and then boom, picks up right again. So we've got a lot of buying somewhere right in this middle range around 4,300. Seems to be a popular turnaround point from a market standpoint. The sustainability of it at this particular point is fairly decent at this particular stage. If the I'm looking at that shakeout, I want to see that above negative 13.5. If it gets there, then I think it's something where we may see a little bit more leg, which is why I think that it could push all the way to the 50. But really anxious to see that meeting here of the cyan and green, because the rejection of cyan coming back up means you're coming back to at least to the 23%, and particularly if we get an MBI weight move to the upside. But for now, still holding on to the bullish configuration of it so far. We'll continue to follow it. Indicator updates will be sent out, as well as the updates that took place on the paint bars. Probably won't notice too much of that because it just do everything for you automatically. But on the 50K Opus T, definitely some alterations in the stop configuration and the trail, which I'll probably go over on video for the beginning of the month, and we'll be able to get an idea of how those function. As always, though, trade well. We'll talk again later. See you on the Skype chat.